about Rakesh Sharma as well, the ED at Bajaj Auto. The stock is reacting positively after the commentary regarding exports is something that the street likes. And that is exactly my first question, Rakesh. Good morning, first up, and thank you so much for speaking with ET now. You're expecting exports to see a sharp improvement from Q3 onwards itself. What's the monthly run rate that we should expect?
Good morning. No, I'm not expecting a sharp increase, but I think Q3 will be better than Q2. The demand environment is still uncertain, but what has happened in Q2 is that we cut down our exports to ensure that the stocks on the water as well as with the distributors, with our channel partners, were brought in line with the retails, and therefore our exports in Q2 were lower than actually the retails which we were experiencing on the ground in Q2. And in terms of retails, July was the low point, August was slightly better than July, and September was better than August. So therefore, going forward, we don't see any need to now trim down stocks further. Retails will be matched by shipments from India, and therefore we feel that Q3 will be better than Q2. However, the cloud of uncertainty still hangs there. It takes time, in our view, when such a macroeconomic event occurs, which is really the sharp appreciation of the dollar and the movement of dollars to US, the availability of dollars for international trade reduces. And our experience is that it does take anywhere between 4 to 6 months for it to sort of get digested and sorted out. So we will be obviously monitoring this closely and take it as it comes.
Rakesh, you wouldn't be kind enough to give us a number or some sort of guidance, would you, for exports?
See, I feel that, like I said, Q3 will be better than Q2, but in this kind of a situation, giving you a number is, would be misleading and would be not in my powers to give it with any kind of conviction. But the trend lines are suggesting that Q3 should be better than Q2, and then hopefully Q4 will be maintained at Q3 levels. I think that probably is more meaningful than articulating a precise number.
Mr. Sharma, good morning. Nikunj also joining in. Let's talk about the domestic market. This time Diwali is early, which means large part of the uptake for Diwali, the share must have captured at least in the quarter gone by. So could there be a reversal? Could there be a lull? Could there be a drop because of early Diwali in the share?
Well, the festive is still ongoing. I mean, Diwali is yet to happen, and you know that a lot of sales get loaded during Dhanteras and Diwali day itself. We think that the industry is experiencing a low single growth on a cumulative basis from Navratras to now. Before that, the underlying performance of the industry, I think, was -5%, -6% zone. So this movement from minus to positive is very welcome. It should continue during Dhanteras and Diwali. But the key months to watch will be November, and whether, these trends then sustain themselves and the industry finally moves into a positive zone on a sustained basis. These 15-20 days of festive, it's welcome to see the exuberance in sales, but really they do not indicate fundamental trends, and we'll be more interested in how the industry is moving at a fundamental level. It's actually composed of two segments. One is the entry-level segment, which are generally the 100cc bikes, which is 50% of the industry now. That is showing a lot of decline, but the 125cc is showing and plus segment is showing a dramatically opposite movement. It is showing strong positive growth. Our focus, as you know, has been on the 125cc plus segment for quite some time now. And because of that, I think we are outpacing the industry and also outpacing the industry in this segment itself.
So tell me, what is the game plan when it comes to your 125cc bikes? Do you add more products, more new launches? Is that going to drive growth in this particular segment? or is it an aggressive marketing strategy that you're looking at and looking at growing the volumes within the current launches?
No, the recognition of the fact that this is the segment which is going to outperform the industry, and it's almost 48% now, which is not just the 125cc, but it's also the 150s and beyond. So it is the that segment. Uh, our approach is to grow by focusing our innovation energies over there. So there has been a slew of launches, which has already happened. Our flagship brand there is Pulsar, where we started the change of platform process last year itself with the launch of the 250cc's. In quarter two, we have rolled out a new 160 dual channel ABS bike across the country to outstanding reception. And that has fueled actually the growth as well as supported profitability in quarter two. So we will be leveraging on this, and we will see in November and December, and then in quarter four, a few more launches. We have launched an entry-level 125cc bike, which is a CT 125 already, and that also is showing good traction. So yes, the entire energy is to expand the product portfolio, price it correctly, and try and upgrade the market and take advantage of the tailwinds which this segment is experiencing.
There was a time when Mr. Bajaj had said the following, that we are not gunning for market share. We want to be a profitable, and we want to be the most profitable two-wheeler company in India. Then there was a time when you reoriented your margin strategy to protect the market share gain. Next 3 years, will it be a balance of both, or it is going to be one above the other?
I think I really don't know what quote you are using, but I can tell you our approach is to aggressively expand our market share and our size in India and internationally. But we do not do that at the cost of profitability. It is also because it's not that price is the only reason, only lever available to grow. Fortunately, like I described, there are segments which are enjoying the tailwinds, which offer you several degrees of freedom to grow market shares, which go beyond price and largely the opportunity to leverage innovation. So we will be maximizing market share, but we are not going to, shave off our margins and reduce prices. There may have been periods in the last 3 or 4 years when we didn't have a product offering, or it would take, let's say, we felt that we needed a bridge of 12 to 18 months before our new products got in. For example, I will tell you, we saw that the 125cc segment was poised for growth, and we didn't have a product. So we had priced entry-level 150cc at a more affordable price, making it accessible to the 125cc customer till the time we got a genuine 125cc. And the moment we have launched a 125cc, those prices have been taken back. So there may have been exceptions like this in the last 3-4 years, but the theme in the company is to grow market share, but not at the cost of margins. We definitely want to be the most profitable company in motorcycles and three-wheelers in India and internationally as well.
Spend a lot of time discussing QSQT, quarter se quarter tak. So I'll discuss year se year tak. Next 2 years, next 3 years, given that a lot of challenges were there for last couple of years, commodity prices, there was a challenge in terms of what was happening in the export market. Now things are looking up. Your margins have improved. 125cc category demand seems to be coming back. Export is 50% of your total exports where rupees are tailwind. There are a lot of things which are working for you. So if the environment has changed, could you go back to numbers on the margin front which are nearing 20, even 20 plus in a couple of quarters, maybe 2 years?
See, first of all, let me tell you that the environment is not in equilibrium. it has become, in fact, a more complex environment, and the more sort of you are interfacing with it, like we are, not just in India, but in 70 countries internationally. While at one end, it provides you diversification and ability to, offset decline somewhere with growth somewhere, that actually gives you a lot of resilience, like we have delivered a record smashing quarter in a very difficult environment. However, on the other side, it makes management more complex. So I wouldn't say that things are, of course, there are segments which are growing, but I wouldn't say that the volatility in the world is a thing of the past. We have to have a very strong focus on quarter by quarter management. The days of having, a vision and mission for for a period of 1 year, 2 years, or 3 years, they have their purpose, but it's of very limited purpose. So apart from product development, which needs a longer time horizon, on all other aspects, we are taking it quarter by quarter.
Okay, so we've discussed demand environment, both international as well as domestic. We've talked about margins, but let's shift focus and talk about the EV space as well. What's the update with your three-wheeler when it comes to the EV business? And is that going to launch? And how's Chetak been doing?
Chetak has done extremely well. You know that we were limited by supply chain issues. Not just the quantum, but the visibility of supply chain was poor, which, constrains you from opening up the network, because you don't want dealers to invest in infrastructure and then not supply them. And therefore, we were loath to drive a network expansion. Now, since the last 1 or 2 months, we've got an ever improving visibility of supply chain and availabilities right into Q4, which is allowing us now, as we speak, to expand the footprint, which is right now about 39-40 cities. It should go to about 85-90 by end of the quarter. And the pace of growth, which you have seen between Q1 and Q2 in Chetak, should continue in the same level of absolute additions between Q2 and Q3, and therefore from Q3 to Q4. So we are now very, very optimistic that we'll finally be able to fulfill the outstanding reception which Chetak has been getting across the country. When it comes to three-wheelers, the three-wheeler introductions have got delayed because we are trying to optimize our product proposition. What we have recognized in the last 1 year is that the commercial requirements, three-wheeler is a commercial product, and the requirements of the commercial customer are far more stringent and very, very specific. There is already a very strong CNG play which is out there. And therefore, the trials have got extended. We are trialing our products with drivers in a real-time trial so that we can optimize the proposition and come back with something which is very close to the sweet spot. I expect that to take probably to end of the fourth quarter, maybe by about March, to be able to go commercially in selective cities.
Have you on the show today. Thank you so much for speaking with ET Now. Right. Okay.